Wonderful. Well, we're going to go ahead and get started as people are still starting to file in. A few quick notes about housekeeping. We are going to have time for question and answer later on today in the program. Please direct all questions via the Q&A button. The chat is really just meant to introduce yourself and for comments, but the Q&A is really where we'll be able to access and answer any questions that you have. Know that this session is being recorded. And so we will share that out via email afterwards, and we encourage you to share it with other businesses and other folks who may be interested in it. Just a quick overview of the agenda. We'll have some welcome remarks from AARP, some opening remarks from the Comptroller, and then we'll dive deep into the program itself and go over MyCTSavings. And then again, we will have time at the end for any questions so folks can get their specific questions answered. But before we dive in, I do want to take a moment to thank so many different partners. Over 15 small business chambers and organizations helped co-sponsor the event today to promote it with their networks and talk a little bit more about this program and help educate folks. And we're just so grateful to them and their participation and for all the work that they do to help support small businesses in Connecticut. And with that, it's time to officially start the program and hand off to Tim Ryan over at AARP. Tim, over to you.
Yeah, thanks, Colin. And thanks to everybody who's come into the webinar today. I work with a lot of small businesses and can appreciate that your time is very valuable. My bullet point thoughts on this program is that everyone should be able to support this program. It was designed to be a no cost to the employer, no cost to the state program. Traditional employer-based pension plans that I relied on just don't exist anymore. The new reality is the onus is on the employee to save for their own future. My message when I talk to people is that they need to develop healthier saving habits. In my day, it was always putting away 10% of your earnings for a rainy day. And I think MyCTSavings can be that tool that helps people achieve financial independence. I've seen too many people struggle financially, retire in poverty, and spend their final years unhappy. Let's not have that happen to your employees. Anyone can build a financial security if they start early enough. Also, if people don't save for the future, there's a huge negative implication for Connecticut public policy in the future, as our aging population will put stress on safety net programs. And by the way, Connecticut is not the only state doing a program like this. 3 states beat us to the punch and have programs already up and running, and several other states are following with plans of their own very soon. Now I'd like to introduce our state controller. Natalie Braswell is completing the term of her friend and former colleague, Kevin Lembo, who resigned due to health issues last December. She was appointed by Governor Lamont. She is key to managing the rollout of this MyCTSavings program. Braswell served for 10 years as general counsel and assistant state controller under Lembo. As the agency's chief legal officer, she negotiated and drafted a number of technology, healthcare, pharmacy, and consulting contracts with statewide impact, and served as a chief negotiator for transformative agreements to modernize service delivery and save taxpayer dollars. Braswell played a critical role in the development of fiscal policy, retirement savings programs, healthcare initiatives, and other key agency operations. Braswell is a triple Husky, having attended UConn, where she earned a BA in political science, then a master's in public administration, and finally a JD from the School of Law. She lives in Bloomfield with her husband, Rob, and her daughter, Gabby, and their dog. And it's all yours, Natalie. Take it away.
Good afternoon, everyone. Thanks to you, AARP, and the many small business organization partners who have co-sponsored this event. My team and I are very excited to be here to speak with you about this very important initiative. As Tim mentioned, I am the state comptroller, and with me today is Jessica Muirhead, director of the MyCTSavings program, and Matthew Golden, director of retirement for Vestwell State Savings. In a few minutes, I'll ask Jessica and Matt to speak about the program in more detail, but I just wanted to start out by giving some background about the program's purpose and initiative. Jess, I think next slide. Across the country, there's a growing gap of workers who don't have enough savings for retirement. I think Tim eloquently spoke about how that is a huge issue in our country. As of 2021, 51% of Americans have increased concerns about retirement due to the COVID-19 pandemic. And nearly 70% of Americans are worried they don't have enough for their future. What's more, millions of workers don't have easy access to retirement savings through typical resources like payroll deductions. In Connecticut alone, more than 600,000 workers have absolutely no access to an employer-sponsored retirement plan. To address this urgent need in Connecticut's workforce in particular, MyCTSavings was created by law to help Connecticut employees save for a dignified future with minimal impact to the business community. Now I'm going to ask Jessica to take over and provide the details to you about the program. Hey, Jess.
Hi. Thank you, Comptroller. Hello, everyone, and thank you for having us here today. Over the next few minutes, we'll cover what the program is, how it works, and how it affects you and your employees. So what is MyCTSavings? This program was designed by the Connecticut Retirement Security Authority to help address the gap in retirement savings access, but was made with sensitivity to smaller employers like yourselves who may not be able to offer their own retirement plan due to cost, administrative burden, or risk to your business acting as a fiduciary. MyCTSavings addresses all three of these issues. This program is free to businesses, simple to facilitate, often taking just minutes per pay period, and your business will have no fiduciary responsibility. All you have to do is facilitate the program and maintain your employee records. At its core, the program works by linking your employees to an individual Roth IRA retirement account directly through their paycheck. Eligible employees are automatically enrolled and have complete control with the opportunity to opt out or change their contribution rate at any time. Let's see if I can get the slide to advance. There we go. So who is affected by this program? MyCTSavings is required to first facilitate for employers who do not already have a qualifying retirement plan and who, as of October 1st of the previous calendar year, had more than 5 employees. Both part-time and full-time employees are included, and at least 5 of those employees must have been paid $5,000 or more in taxable wages. If your business falls under this criteria, you will need to sign your eligible employees up for this program. Eligible employees provide services within the state of Connecticut, are 19 years of age or older, and have worked at their qualifying employer for at least 120 days. While eligible employees must be enrolled, they have control over their account and can opt out at any time, which we'll go over in a little more detail in a moment. So we know you're busy with attending to your business needs. So if this program applies to you, your role is an easy 3-step process. You are not responsible for employee education, for managing your employees' retirement accounts, or for any of the program's costs. Our system works with your payroll processes to streamline payroll contributions, and you can even assign your payroll provider, if you have one, to manage the process for you. First, you will register your business at the secure online portal using a unique access code, which will be provided to you via communications from us, or which can be obtained at any time by contacting our help center. Second, You will upload your payroll and employee information into the system so that contributions are made on your payroll cycle. Only the information needed to open a Roth IRA account will be required, and the data is kept strictly confidential, just like any other retirement account. All accounts and the online portal are professionally managed by the program's contracted administrator, Vestwell State Savings and the Bank of New York Mellon. Lastly, you will only need to upload contributions on your pay cycle and keep your staff lists up to date. Employers from our pilot testing phase tell us that making contributions took them just minutes out of the week to provide retirement access to their employees. And that's it. So what this means for your employees: after your business completes sign up and submits employee information, employees will be automatically enrolled into their accounts by the program. And you won't need to worry about managing your employees' materials or accounts. The program will communicate directly with your employees to inform them of their options, provide educational materials, and account details. We know that individual needs may vary, so employee participation is always voluntary. No contributions will be made for the first 30-day opt-out period, which gives your employees the chance to consider what makes the most financial sense for them. Your employees will have 3 options. First, they can do nothing during this time, in which case they will be defaulted into the standard savings and investment options, a 3% payroll contribution in a diversified target date fund based upon their year of birth. Or they can customize their savings choices, including changing their contribution levels and choosing from a variety of different investment mixes. Or they can opt out of the program entirely. With MyCTSavings, your employees will have control. They will have access to online tools and real people at our customer service center if they have questions. They can change their investment options at any time. Their accounts are portable if they ever change jobs. And if they do opt out, they can opt back into the program anytime that they wish. If you already provide a retirement savings program for your employees, you will be exempt from the MyCTSavings program and will only be required to certify your exemption. Certifying exemption is easy. First, you make sure that your benefit qualifies as a retirement plan under the IRS code. Then you use your unique sign-in code to log on to the portal. You'll certify your exemption with a few quick details, and that's it. You will only need to update your exemption if you ever drop your plan or no longer provide a retirement benefit. Deadlines and getting started early. After a 6-month pilot phase, MyCTSavings launched on April 1st of this year and is now available to all eligible employers. Employers who fall under the program's criteria will either need to sign up or certify their exemption by these deadlines set out over the next year. Deadlines are based on the number of employees that you have. If you have 100 or more employees, you will need to respond by the end of this month. It's about 2 weeks from now on June 30th. If you have 26 to 99 employees, your response is needed by October 31st. And if you have between 5 and 25 employees, you will have until March 30th of next year. But you don't have to wait to get started. You can sign up at any time to provide retirement access to your employees today so that they can start saving for tomorrow. And we're here to help. Our employer support team is available to you by calling 1-833-811-7435, or you can visit www.myctsavings.com for more information at any time. So thank you for joining us today and for your interest in the program. So we'll be happy to take any questions that you may have at this time.
Thanks, Jess. I think we have a few questions in the Q&A. I don't know if you have had a chance to pull those up and take a look.
Let me just pull those up right now. Are employers with under 5 employees able to participate in the program? At this time, no, the smaller employers with under 5 employees are not able to participate in the program. Can employees participate if their small company under 5 employees does not participate? So in the future, we may have an option for individuals to sign up via their bank account. That will be rolled out in the future. It's not available at this time. Matt, please correct me if I'm wrong there, but yes, individuals will be able to elect into the program at some time in the future.
Sometime in the future, right?
yeah.
Not currently at
But
launch.
not currently, yes. How does this program apply to solopreneurs? So for a business that's, I think that's similar to these previous questions where it's just one person, it would have to be after there are 5 employees in the entrepreneurs, or once the program has rolled out, being able to sign up directly with the program. If you work with independent contractors on a regular basis, would this be available? So for independent contractors or 1099 employees, they do not count. The law says that it has to be $5,000 or more of taxable wages. And paying an independent contractor is not considered a taxable wage. So independent contractors would not apply under this program if your business has a lot of independent contractors. Are there how-to videos to register and navigate the portal? Yes, in fact, there are on our resources pages. There are multiple tutorial videos on how to go through the process step by step. Will our payroll company increase their fees to set up direct contributions? Adding the line in the pay stub. So Matt, do you want to take that one?
Yeah, I think that's really dependent on the payroll company and the services that they provide for you. It's a pretty straightforward deduction. It's a Roth IRA. But I think there has been some experience with some payroll providers in the other states, not a large percentage, who have said, well, we can do this for you, but we may need to charge a fee. I think predominantly what the experience has been in the rollout of these programs in other states is that most payroll providers would be willing to help out, as just part of their service that they offer for you. But it's really dependent on the individual payroll provider and your relationship with them.
All right. Thanks, Matt. I have another question that says, but does it apply to 1099 employees? No, it does not apply to 1099 employees. If employees express that they do not want to participate, do I still need to upload their information and make them opt out? So the way that the program works is that you upload your employees first, and then the employees make an opt out or change the selection of their investments. You actually don't have to do anything on that end. The only role of the employer for that is, you sign up for the program, give your business information, and then your employee roster and information. And then at that point, the program communicates directly with the employee, and the employee would be responsible for opting out or opting back into the program, et cetera. That is, you don't have to manage that. The employee and the program communicate directly at that point. What did we say the age restriction was for opening up an account? So the law in Connecticut for this program is the employee to be eligible for the program has to be 19 years of age or older, and have worked at your business for 120 days or more. Do we have a ballpark time frame for the rollout of the program for employers from 1 to 4 employees, individuals, and others not covered by this program? So for employers with 1 to 4 employees, that may necessitate a change in the law to reduce the number of the definition of what makes an eligible employer. Right now it's at 5, and the employers for 1 to 4 employees are just not included at all as a part of the law. So that may necessitate a change before we can roll that out to smaller employers. For individuals, Matt, I'll let you answer that.
Yeah, I think that's also dependent on the law itself. I believe the Connecticut statute does not include that language at this time.
So can employers contribute an amount directly for the employee? So no, as much as we would love to allow employers to be able to make contributions if they elected to do so, we will, this is not an employer-sponsored plan, and we would not be able to permit employers to make contributions due to current federal law. Would this prevent an employee from having an additional individual Roth IRA? Would they need to personally be mindful of the max allowed IRS contribution for the year? It would not prevent them from having an additional Roth IRA. However, in your second question, yes, they would need to be aware of how much contributions they're making total to the IRS limits.
Yeah,
Matt,
that's correct. Yeah, that's correct. Just because the program doesn't know, so the program itself can only monitor how much an individual, and will monitor how much the individual is putting into the MyCTSavings Roth IRA. But the employee, if they do have a separate IRA, will need to monitor, those two accounts on their own, if you will.
Right. That said, if you have an employee who is employed at your business and also is employed at another business that participates in this program, one of the benefits for them is that it's a single account.
That's correct.
Once registered, do we contact employees directly? And if so, how? Yes, we do. The program contacts employees directly, so that responsibility is not on you and your the small amount of time you already have. Matt, do you want to describe how we communicate?
Definitely. Yeah, as part of the onboarding process for the employer, part of the registration process, program will ask you to add your employee's information that's necessary to set up an IRA. Part of that information includes a name, address, and if available, an email address. And so if an email address is provided, then the program will communicate directly to that employee via email. If no email address is given, then a paper letter will go out to the employee's address. And so just to add a little more color on that, so a notice will go out the next day after an employee is added by the employer, either via email or a paper letter. And then if the employee takes no action, just a reminder notice will go out 20 days later. Say, okay, if you'd like to do something, or you can do nothing. And then finally on day 31, an enrollment packet is sent out, and once again via email if we have it, or via paper if we do not, just to confirm that the employee now has an IRA account in the MyCTSavings program.
Thanks, Matt. Once registered, do we, oh, nope, we already did that one. Next one, is there any upper age limit for employees to participate? No.
No.
No, that's a simple one. Can we explain the process? Example, 1, we register in the portal. 2, we upload the info. 3, we send, okay. Matt, can you just kind of give a general overview of how it works?
Right. And to just go back to what I was saying. So an employer will go to the portal, and the employer, when it's their turn, so to speak. Now the program is open to all employers at this time who have 5 or more employees in the state of Connecticut, but the program will send out a notice in advance of the specific deadline with an access code to the employer to go on and register for the program. Employers who have a qualified retirement plan can use that same access code to exempt. But for those employers who are joining the program, we'll ask you to go through the registration process, which is to set up a password as an employer, identify yourself as an employer, add a teammate if you'd like, if your payroll provider is going to help you with this, or if you have somebody on your team who may handle your HR tasks, you can add them to the program at that time. And then add your bank information and your payroll schedule. So when it is time to send in payroll deductions, that is all set up. And then finally, add your employee roster information. So it's the information that is required to set up an IRA: name, date of birth, social security number, physical and mailing address if they're different as well. Then we will also request, if available, email and telephone number so that we can contact the employees. So that is part 1 for the employer. At that point, the program will begin the notification process that I just walked through to the employees to explain the program and help them understand their options. Then after that 30-day period, after adding those initial employees, the program through the website, which you as the employer have now registered, will send you notifications via email to say, okay, you now have eligible employees and it is time to begin making payroll deductions. And in that employee roster that you've added, the program will keep track and update which employees have opted out, which employees are enrolled, and at what percentage. So an employee can change their payroll deduction percentage from the standard rate of 3. They can change it to 1, to 2, to 10, to 100% of their paycheck if they like. So that information will be provided to you, and you will be prompted and notified as the employer that now is the time to take action and begin making payroll deductions in the next payroll cycle that you have coming up. And from there, once a payroll deduction is made from the employee's paychecks, then there's a simple process for you to come back, you or your payroll provider or your teammate representative, to enter that payroll deduction amount for each employee and to hit submit. At that point, because we've set up a banking connection with your bank for which you have payroll receipts in, that money, once you confirm, that money will be pulled from your bank and contributed directly into the individual Roth IRAs for your employees. From there, it's just a repeat. So the next payroll cycle, if there are any changes, the program will let you know. Otherwise, if there are no changes of your employees, you just remit the same payroll deduction percentages for those employees that you did in the prior payroll.
All right, thank you, Matt. Does an account still need to be opened even if the staff does not meet the age requirement? No. So if somebody is less than 19 years of age, then the account will not be open for them,
Right.
and they don't need to be uploaded.
That's correct. You'll get an error if you enter a date of birth that the person is less than 19, and the program won't let you actually submit that employee.
This is from someone who missed a little bit of the beginning, and they're asking if it's a mandatory program. The program is mandatory if you meet the employer eligibility requirements, which was listed earlier, but very briefly is 5 employees or more, at least 5 of whom were paid $5,000 or more in taxable wages last year. If an employee decides to contribute 10%, but it ends up to be more than the $6,500 allowed by the IRS, will the system tell the employee that they have it maxed out? What will happen to the overfunded amount? Will it roll over to the next year? Okay, Matt, can you take that one, please?
Sure. So the program will monitor each individual employee's annual contributions that come into the program each year. If an employee hits the limit, and just to be clear, it's $6,000 for employees under age 50. There is an additional $1,000 available for employees over 50. So monitoring for that will be done by the program. When an employee hits that limit, the employer will be notified to stop taking that payroll deduction, and no additional contribution will be allowed for that employee into the IRA that year. So there's no ability to over contribute into this program for that employee. The beginning of the next year, the employer will be notified to begin taking payroll deductions again, unless the employee decided to opt out in the meantime.
All right, thank you, Matt. Is the payroll deduction after or before taxes? It is after tax deduction.
That's correct.
Is there any annual audit for the employer to make sure all funds were deducted and sent to the program? Matt, can you?
Yeah, so there's no specific audit at the employer by employer level. However, the employer can track on their employer dashboard the total contributions that have been submitted to the program year over year.
What is the max percent a person can contribute of their salary? Actually, there is no maximum other than the IRS limits. So, you know, if you have a part-time employee who isn't expected to make more than $6,500 and they want to set theirs to, 100%, they can do that. What is the max contribution, or does it go on age? Oh, this is a similar question, so we'll move on. So, okay, so the person is asking, so you withdraw the amount directly from the business's bank account and the payroll service does not send it to us. We need to notify our payroll service what that withdrawal amount was for so they can put it on the pay stub.
Yeah, so maybe I can just clear that up a little bit. So this will, most every payroll system will show a deduction from your paycheck. This will be another deduction into an IRA for that employee. So they should see it on their pay stub. It's really about how you work with your payroll provider as to whether they are involved with the submission of payroll or not from your bank account. But the employees should absolutely see this as a deduction from their paycheck, so that they can track not only that there was a deduction from their paycheck, but then they can log in or call the program and confirm that that exact dollar amount has been contributed to their own IRA, which they own. It's always theirs. And so, yes.
All right, Matt, I think this might be a question for you. Is it the responsibility of the employer to remove an employee from payroll deductions if they are notified that the employee has reached their maximum?
Yeah, so it's the responsibility of the employer to take an action for the payroll deduction when the employee makes any change. So, and I would characterize this as similar to an employee making a change. So if the employee decides that, now they need to take a pause on saving and they reduce their deduction rate to 0, then the employer will be notified to change the deduction to 0%. If the program notifies the employer that an employee has reached the max and to stop, that it's essentially the same thing. The program is telling you, the employer, to change this employee to a zero deduction. The program will then tell the employer to restart for that employee at the beginning of the year.
Okay, thank you, Matt. Can an employee withdraw funds? Is interest on funds taxed? So this is a Roth IRA, like any other Roth IRA. So the same rules that would apply to a Roth IRA apply to this program as well. So an employee could withdraw funds, subject to the rules of withdrawal around a Roth IRA account as established by the IRS.
That's correct. So contributions are always available without any tax or penalty because it's an after-tax contribution into a Roth IRA. And then dependent on the employee's age or qualifications, any interest or earnings may or may not be taxed.
All right. Do we have any more questions for today? If not, we're always available via our website and on our employee assistance line. So if anyone has any additional questions, please feel free to reach out to us. We're happy to help in any way that we can. One employer asked, when do we get our code? Matt, can you?
Certainly. So we have a code available for all employers that were identified by the state as under the legislation of the law. So you can call the 800 number that Jessica provided at any time to see if we have a record of your business, and you will be provided that code. If you are waiting for your deadline based on the size of your employee population, the first communication goes out 90 days in advance of the deadline to employers, and that first communication will have the code. Another notice will go out 60 days in advance, another notice will go out 30 days in advance, etc. Each of those communications will also have the code, the access code, if you will.
All right. Well, I really appreciate you having us here today to bring this program to you. We're here to help. So if you have any questions, please feel free to reach out to us at the program.
Great, thank you.
Thank you, Jess and Matt, for the presentation today. Please note, we will be sharing a recording via email, including all the links that were shared, links to the program, and links to access more information. So be on the lookout for that probably sometime next week. If you have any questions, feel free to reach out to us and we'll get you connected to answer any questions you may have. But with that, it's the end of the webinar. Thank you so much for joining us today and have a great weekend.
Thank you, everyone.
Thank you.